In this quick breakdown, I'll show you how to combine market structure with fair value gaps to find precise and high probability trading setups. Now, fair value gaps appear when price moves aggressively, leaving an imbalance behind. Institutions often revisit these levels to rebalance price. That's why they act as key areas of interest for ENT. Here on Ned's Chef, we have this bearish market structure and a bearish fair value gap. We wait for price to sting into that fair value gap to then look for an entry on the lower time frame. This way, we trade with the trend. Now on the lower time frame, we look for a bearish fair value gap that we can take for our advantage. You can see we created a ST, also called sharp turn. That is when we sting into a FEVG aggressively by creating an FEVG and creating a new FEVG into the other direction. That is a sign for high volatile market. Now, we enter on that first fair value gap that is in favor with our bias. But be careful by connecting time frames with each other. I personally like to take a risk to reward 1-2. If you are a beginner, go for a 1-1 or 1-1.5. That is enough to make consistent profits. Now let's see how it played out. Here's the edge. If structure is bullish, wait for price to retrace into a bullish fair value gap. If structure is bearish, look for retracements into bearish fair value gaps. This way, you're trading with the trend at precise levels with a clear bias.